someone can stream and make like 5 to 10K, that's insane. That's like maybe like a 2-3 year salary for some people. So
last thing you hear before all of India is going to enter the pump.fun live stream section.
I actually completely underestimated this trend. I never really looked at it, to be honest. I don't know if you guys watch a lot of streams.
It is very dependent on that streamer. Like once the streamer stops streaming or he gets boring or arrested or whatever or killed, the coin is basically dead.
If it were to be perceived as a two-token model, yes, that's problematic. But I don't see that at all. I don't see that at all.
Because you said that you're like pretty certain that they will add a token further down the road. So what would be the motivation for it?
Base is more a bet on infrastructure and like blockchain infrastructure and an on-chain future. And I think Coinbase is like a traditional bread and butter clearinghouse exchange marketplace business model, right?
We are live.
GM. How's everybody doing? Good. What about yourself, guys? Are you both in Berlin?
Yes, sir. I mean, it's been quite an eventful week news-wise since the last time we talked. Price-wise, I would say the only thing that has made notable rounds is pump.fun. It has basically, since last time we talked, I think was last Wednesday. So let's say usually a week ago, let's say September 9th, September 10th, it has almost doubled since then. And it's like not a 100 million market cap coin. I think right now it's sitting at, I don't know, like a couple of billion. And that has been dominating the crypto Twitter discussion over the last couple of days. We've seen quite a bit of a resurgence on the Pump live streaming side. Are any of you guys watching these or have you looked into them?
Me not, to be honest.
I only watch clips, but I also only ever watch clips from Twitch or other streams.
I think I've been looking at Pump, like on the Pump website, more over the last, let's say, week or two versus the entire time prior. Usually I always interacted with like meme coins or trend stuff over like Dex Screener to find out what is currently trending or like the similar aggregator sites, but never really spent time on the Pump platform itself. And some of my like good crypto friends are like super bulled up on Pump streaming. So I got a little curious, and I mean, it's quite interesting how some people are able to really get a lot of money through these creator revenues, even though they stream about like very banal and boring topics. I have not come across anything that is like, where I'd say high quality, long lasting, interesting, whatever. There's obviously a bunch of people who just do like crazy, funny stuff. And I am somewhat concerned that this could spiral out of control in a similar manner than last year. I don't remember when exactly that was, but I think like it was half a year ago or a year ago where Pump already had streaming live and they had to like take it down because like people started like shooting their pets or whatever if their coins didn't reach a certain market cap. So there is nothing inherently that makes this time different. Even though obviously the platform has matured, the team has matured, they probably have better moderation in place by now. But curious to hear you guys' takes because that's like the thing that everybody talks about right now.
I think that's exactly the difference. The difference is now there is content moderation in place, and even existing streamers have been banned from streaming due to certain things that they've done or said on stream, and there's like a cumbersome resolution process. So I think it's exactly that. I think now they have like content moderation in place.
Yeah, I mean, the other aspect of it, so I would say I'm from the generation early 2000s, and this entire streaming topic never really hit me so much. I think it really became popular in the COVID times, and all of a sudden it was there, but streaming became like so much more relevant throughout the past couple of years that it now enters the industry somehow. I mean, there were like a lot of live streams already, but I think it really, really took off in the past 2 or 3 years, live streaming. I actually completely underestimated this trend I never really looked at it, to be honest. I don't know if you guys watch a lot of streams, but personally, I don't watch a lot of live streams except sports events.
Yeah.
No, I have been sorry. I have been watching a lot of streams, honestly, all the way from Justin TV, which became Twitch and which was acquired by Amazon. But the reason for that was gaming. Like, I'd much rather watch an interesting Counter-Strike or Dota 2 match from like two competing teams than a random TV series on, Friday night or whatever. Like I think I lost complete touch for TV a long time ago, but it was always between like YouTube, Netflix, and streaming was always like part of the mix for me. And after, like, for me, it's not so much about live streaming though. So for me, it's more about the views of the clips that they generate. And, I would never watch like a 2.5 hour stream because I follow someone. But, if there's like a funny clip of them where something happened, that would probably come to my attention. And that's always come to my attention in my social feeds.
What I find like so hilarious about this is that I think between us two is like 15 years or something, but I behave much more like your generation and you behave much more than my generation. I don't watch a lot of clips. I don't watch a lot of streams. I'm the Netflix guy, so to say. And yeah, you're completely a Gen Z.
I'm very internet native, I would say. Always have been.
Yeah.
Yeah. No, I mean, Juri and I, we are pretty much the same age. I think there's a couple of months between us, but I mostly resonate with that. Like when I was in 10th grade, 9th grade, so roughly 10 years ago, I was watching a lot of like GTA 5, like let's plays and like these. I don't know if it was live streams back then. Like I've always been very much on YouTube, never really ventured into Twitch or any of these platforms. And yeah, I agree that, I mean, I think for the people, I mean, we can only talk about Germany and like a little bit about the US in terms of like native like understanding of the cultures. But I think, yeah, especially since COVID, it became much more relevant. These people streaming on Twitch, it seems like the YouTube creator generation that people like Yuri and I used to watch when we were, let's say, in our teens is mostly irrelevant by now, or they have just like pivoted to other stuff, and they kind of got replaced by this streamer generation. And like, yeah, it kind of fragmented, even though I don't think in an absolute sense, because people still like the viewership overall increased because just like people's screen time increased and there's more overall people to reach with that stuff. But yeah, I think for new people who do not have a lot of followers, Pump is the place to go right now because it's just way easier and straightforward to monetize. And I think there will be kind of a barbell between really extractive stuff. For example, this morning when I woke up and scrolled the timeline, were tweets about like some dude who looked like he was on life support and disabled and everything, and the stream was titled 12 hours left to live, or like 20 hours left to live. The dude just like rocked everybody after he made a few $100, and it's like, this is pretty insane.
I think
On the other side of a barbell, you'll also have a chance to get pretty wholesome moments out of this, because like people throw money around in crypto much more liberally than in real life. And yeah, I do think that has the chance to like actually help people kind of through troubles or to support family members by streaming about them. Like there's one guy, like some fat American kid who like got depressed and overweight because his mom got cancer, and now he's running like a I'm on the treadmill until 10 million market cap or whatever coin. I mean, the longevity of these streams and coins, etc., is very debatable, but I do think that it is a genuine chance for the sentiment and perception of the trenches to improve, because like you can generate useful stuff out of this, but I am very certain that if at all, this is only going to be one side of a barbell.
so. A couple of comments. I think the streamer meta or CCM, content capital markets or creator capital markets as they push it. I mean, you can never politically, from a top-down approach, push these narratives. You can, but I don't think they're sustainable at all. So I'm yet to kind of see that meta to sustain, because it's just like everything else in crypto, purely based off speculation. If there's no speculation, there's no creator fees, and it will be quite boring. However, I have a comment on the creator fees, right? Because I was surprised people were not more shocked about Believe App coins. Because Believe App coins were they felt straight up like farms. And I think Startup being the biggest of them. And the reason for that was their fee model and how much of the fees go to the creators. For example, Mate, I don't want to say something wrong, but I think way over 8 figures in fees. And that is insane to me. Like, you don't have to sell a single token. And Pump adopted some version of that, which I think is fine. But, you have to always ask yourself, where's that money coming from and where is it subsidized from, right? And basically, like, retail is paying for it. The traders are paying for it. Pump didn't really cut their own fee. Maybe they did a little bit, but it's mainly a new fee that has been introduced on top of the existing fee structure. So it's just something to take into consideration. And I know a lot of like whale traders who trade 7-8 figures on chain. And they all agree that they're not trading anything above a percent fee. I mean, if it's like 0.2, 0.5%, that's fine. But if it's a percent, they're going to a SEX. They're going to like a centralized exchange, and they're going to trade the coin there. So that's like a few comments here. And the last thing I want to say is regarding the value of money for some people in society. And I think we are completely detached from reality in crypto when it comes to what people do for what amount of money. I remember there was a DEF CON conference in Colombia, and everyone was like concerned about safety issues or whatever. I didn't really care. I went there, and I also traveled to Medellin. I'm in Juri, there was a Cosmoverse, and it was super safe. Like, everything was super nice. I think people didn't really care too much about crypto. However, I met someone who had a private security, and hung out with them. We spoke a little bit, and then one day he came and he was like, yeah, like, one of his employees of the security company was shot dead. I was like, whoa, that's crazy. Like, what happened? Apparently he had like a necklace, like a chain or something, and it was worth like $200. So for $200, someone was killed, essentially, right? And that kind of, for me, was one of these moments where, like, if you put into perspective how much a few hundred or even a few $1,000s is for a lot of the population, the pump.fun streaming stuff is quite life-changing. Like, if someone can stream and make like 5 to 10K, that's insane. That's like maybe like a 2-3 year salary for some people. So
Last
yeah.
thing you hear before all of India is going to enter the Pump.fun live stream section.
You always have to.
Couldn't resist, sorry. But yeah, I mean, I agree. Like, there's this interesting development to see how these geographically agnostic economics will play out, because like obviously you have like insane orders of magnitudes and differences in purchasing power across countries with the same amount of US dollar equivalent. Yeah, I'm honestly kind of surprised that not more people are jumping on that Pump.fun live streaming meta right now. It's like yeah, but let's see. Oh yeah, one point that you made, I want to comment the kind of a fee section. I think if you talk about retail stuff, they don't care, especially if it's very low value transaction. I mean, if people cared, Coinbase would be out of business. Pretty much every single European exchange would be out of business. Axiom would be out of business. Like, these things would make $0 in revenue if people were actually price sensitive or like price elastic towards fees. I mean, obviously there is a turning point where people start to care, where it becomes too extractive. But overall, like, if it's just a few percentage points, people really don't seem to care. Especially if it's like, if you're gambling on a 10x X or whatever that people do with these streamer coins, a 1% fee does not matter. If you're talking stablecoin farming, every 0.05, like every 5 basis points in swap fees will matter a lot, because you're looking at, if you're farming with, I don't know, 7 digits, you're looking at a 15% APR on average. So like every single swap really breaks the bank there, or like significantly decreases your margin at the end of the day. So yeah, I just think it's very different customer groups. Also, the people who are trading on chain with 7 or 8 figures, I mean, you can't trade these streamer coins with these volumes. So like the sensitivity towards fees there, I do think is different. And yeah, I think we've also seen it over and over, just through the different iterations of the launchpad meta, both like Pump, the Bonk launchpad, then if you use some trading terminal like GM or Axiom on top of that, these have been outrageously high fees compared to most other applications in crypto. And we have not seen any notable difference in activity between like minor changes in fees. But yeah, let's see how that plays out. Have you guys seen the news of the base token being discussed? I think that's another big development this week.
No, what's the TLDR?
So basically, there's Basecamp, like a conference thing, and Jesse Pollack, he tweeted, or like there have been rumors that Base is kind of evaluating the possibility of launching a token. So it's not an announcement of a Base token; it's basically the announcement of an announcement. But I mean, if they didn't have kind of set in stone the plan to launch one, they wouldn't have even like leaked any rumor. So I think we can be very certain that they will launch a Base token. I don't know about the timeline, because I do think that in the case of Coinbase and like Base, it is a little bit different than for any other L2 or crypto native project, because they do have outstanding equity with the Coinbase stock. So I don't know how they want to structure it without kind of facing a mass legal recourse by Coinbase stockholders. Like, I luckily do not have any horse in that race anymore, because I sold my Coinbase stock a few weeks ago, luckily before the rather sharp correction. But yeah, I do think it's going to be a difficult one to figure out, because they, on the one hand, do not want to kind of dilute Coinbase holders. It also would be very difficult to kind of airdrop it to every Coinbase stockholder, and like, if they did it, like, to what percentage, how else would they distribute the rest of the token? Like, there's no clear cut path to like a way to do it. On the other hand, they could opt to say, like, this is no equity at all. This is just going to be treated like a meme coin, kind of like the Zora token, or like how Jesse and some other base people have been tweeting about some like Zora creator coins a month or two ago. But then it would kind of defeat the purpose of the coin. And like, Coinbase definitely does not want to have the outcome of Base being valued less than other L2s like Arbitrum or Optimism or Polygon. Like, I think that would be pretty devastating for them. So yeah, pretty curious to see how they will figure that out.
Interesting. And have you seen any signs of resistance from the Coinbase side? I mean, I don't really see that part, but I might be completely wrong here. Like, it's very common usually for investors to have both equity and a conversion to token. Although in Coinbase's case, it's different, because Coinbase isn't Base. It's two very separate things. I would say Coinbase is above everything, and Base is just like their main decentralized ecosystem.
Nah, not really. It's like if you said that like for a train company, the trains and like the network of rails would be two different firms. Like
No, not
it's
at all.
basically the same team that is building Base. I mean, they are part of the larger Coinbase organization. Base is funded by Coinbase. Like they are the main distribution vehicle and like the driver of any activity happening on that chain. Like if Coinbase was to cut support for Base, basically it would fade into irrelevance on day one.
I think you're mixing up a few things. If Base were to be shut down tomorrow, Coinbase as a SEX would still exist. If you cut rails from the train network, trains like can't function anymore. That's not the case for Coinbase. Like Coinbase functions without Base. So I think Coinbase is betting heavily on Base as their permissionless version for getting on-chain users for their wallet. They're going to invest into the ecosystem and everything. And I also think your statement is true. Like if Coinbase were to cut support for Base, Bases would be dead. I agree with that. But I still see value capture vehicles being distinct for these two things. Like whenever there is anything regarding to centralized custody or centralized market making or exchange, that's Coinbase's business. That's Coinbase's core business. And whenever there's like a new ecosystem that extracts rent, that's Base's business. So I still don't see why it's an issue for Base to launch a token just because a Coinbase stock exists.
I think we can kind of. I think there. To be honest, like I mean, I don't think that there's like a huge correlation between those things, and I think this is exactly the reason why they also designed it that way structurally with the L2 and keeping the exchange. Also because for Coinbase, I mean, the moneymaker at the end of the day is still the exchange. This is where most of the money is in. But obviously, it's kind of also a reputational thing. Plus, there are ways leading back to Rome, which is the major exchange. I mean, also Kraken is building its own L2, and I believe they don't do this for fun and games. They see like vehicles there that go back to the centralized exchange. I think that's the sole reason for it. So I also pulled up the tweet here from 2024, though, where Jesse once again stressed that there are currently no plans for Base. Now they're looking into it, but I think they're. Yes, I know, but I mean, think of it that way. They want people to use the L2. And if you basically gather some attention around the L2 and basically say, hey, there might be an airdrop, there might be a token further down the road, people are starting to use the L2, right? Because this is how you can incentivize us crypto bros. Is there might be a future airdrop, there's like tremendous yield, yada, yada, yada. This is how you get crypto people's attention. And I think from that perspective, it's not so unsmart to basically always tease it a little bit. So to be, on the one hand, pretty clear to the regulators, there is no token. On the other hand, saying, we are looking into it. There's like the possibility of it. And this is how, for them, it's they're on a safe base.
I mean, directionally, I agree, but still, I mean, I think the plan to issue a token on Base's side is very clear. They want to get it launched. Like Coinbase is not in a winner-take-it-all situation in the centralized exchange market. I mean, their equity is much less valuable, or like should reasonably be much less valuable than the one of Binance. Their fees are pretty high. They do not have great distribution outside of the United States. They are a very big organization, so like they have pretty high running costs. I mean, what they are pretty successful at is like integrating TradFi services into crypto, or just like being the crypto moderation partner for TradFi entities moving on chain with like Coinbase custody and all of these things. But like on the product side towards retail, pro-tail, and like smaller, very crypto native institutions, they do not have a great product. Like you see a lot of bad reviews of Coinbase on like crypto Twitter when it comes to account freezes or like the inability to withdraw when it comes to very long customer support time. Like I've heard of dozens of people, both in the US and outside of the US, that they it's not a great exchange to use. For example, like even Kraken has a much better net promoter score. Customer support service there seems to be pretty good. So like they do have to innovate, they do have to expand, and I think that they are very well aware that the majority of activity is going to be on chain.
But just one question: do you think a token would help to increase,
meantime,
to improve these issues?
In the meantime, to stimulate activity on Base, yes. In the long term, I don't know, because if they want to make the token useful, I mean, we've seen that issue time and time again, where very successful crypto protocols have started to implement some dual token model, which has just never been successful in a single instance. Like the aggregated value of these two tokens usually dropped below the value of the one token prior. And I do not see a path where for coin, the stock, and Base, the token, that would be any different. I think if we were talking about the topic 2 or 3 years ago, maybe it would have been, because the like vehicles to access the Coinbase stock versus the Base tokens were so isolated and separated. But now with stocks moving on chain, the ability of TradFi to trade crypto, I do not think it makes sense to try mix equity rights between like the Coinbase stock and the Base token. So in order for this to be successful, they have to implement some sort of new use case for the Base token, which does not infringe upon the Coinbase stock and vice versa. If they manage to do that, and I don't know how they manage to do that, but if they manage to do it, I think it's going to be successful. Otherwise, it's going to be
I'm just asking you, like, but why do they need a token for it? Like, they can launch the L2, play around, innovate, like exactly what you mentioned. They can improve all of the things that go wrong with the centralized exchange, while dealing with more overhead, more complexity by adding a token, because you said that you're like pretty certain that they will add a token further down the road.
Yeah, I mean,
so what would be the motivation for it?
I think it's more or less inevitable, because they want to use the token to stimulate activity in the short to midterm, because people expect an airdrop to just drive usage of the chain. And I do think that like usage of the chain will increase. I don't know how successful the Base airdrop structuring will be, because like they in the past have been somewhat opinionated towards certain applications that were closer to the like core Base team and Base ecosystem. For example, like they pushed the Zora creator coins quite a bit, or like I think this Friend Tech and Farcaster stuff, which like basically nobody was using, or just very few people were using for a very short amount of time. And I think if they prioritize these user groups over the everyday users of a Base chain who like drive a lot of volume, a lot of activity, etc., I think that could lead to a lot of backlash. And I would argue that this would result in a very unsuccessful token launch. I don't know how to structure the Base airdrop perfectly. I think it's much more complex to do that for a chain, especially where you have somewhat of a conflict of interest with outstanding equity, versus if you're talking about a single application. Like all of these stablecoin focused DeFi dApps with running points programs, I think it is very easy to structure the incentives around the airdrop there. You can slap a bunch of like Pendle, YT multipliers on it to keep the PT high, to drive your total value locked, and that's about it. You keep it running for a few seasons, for a few months, then you launch your token, and like it's pretty easy game. For a chain, I would argue it's much more difficult, especially down the road. I mean, if you were talking about like Arbitrum, I think it was 2 years ago or 2.5 years ago, that was still much easier, because airdrop farming, like systemic airdrop farming, was much less of a thing. Like it was much easier to figure out, okay, who's an organic user of the chain. It's much harder to do that right now. And yeah, especially if you as the chain developers are opinionated more or less about certain applications on there. So yeah, I think if they are able to pull off an airdrop with like good publicity and like good reception within the like broader crypto community, I think that would be quite a positive precedent.
So where's the 2-token model coming from? I completely missed that. Where is the 2-token conversation coming from for Base?
Not for Base the chain, but if you have like Coinbase stock and the Base token, it will inevitably to some extent be perceived as somewhat of a 2-token model. And in the past, if you look at like I think Maker.
No, let's pause there. The first statement I don't agree with. Like, if it were to be perceived as a 2-token model, yes, that's problematic. But I don't see that at all. I don't see that at all. Every major token on-chain has at least one big company that also has equity, whether it's Parity for Ethereum or there's like other opcos of foundation companies.
Yeah, but it's completely different if that's a private company or a publicly traded stock.
Look, for Coinbase, I can tell you the distinct bets. Do you believe in a thriving on-chain ecosystem where every user moving forward in the future will use DeFi, they will use on-chain? That's one of the core ecosystems that they believe in. Maybe you should acquire Base and bet on that. Do you believe in robust, centralized trading infrastructure and Coinbase being the most regulated and one of the leading ones? Then CoinShare is the one. I don't at all see them to dilute. I mean, that's like saying, oh, because, I don't know, like companies that have stocks exist that do something with crypto, some coins will not do well anymore. I don't see that at all. I mean, the stock investor, I think, is a complete different investor than the coin investor. The stock investor are pension funds, it's TradFi, maybe some amount of money from crypto traders as well. But I don't think they overlap as much as you put it. However, a 2-token model is completely different. There you're competing over the same money that sits in crypto. But I think the money that goes into the coin stock is not the money that sits in crypto. That's why I disagree with that statement.
Well, I mean, if I'm a Coinbase stock investor, part of my thesis looking into the future would be that through the Base chain, they are, first of all, are able to kind of stay at the forefront of innovation. More and more of formerly centralized exchange and TradFi stuff is moving natively on chain, and that Coinbase as a platform is able to integrate all of these applications that are on Base, which they have been doing for the past couple of months. For example, they have like natively integrated Aerodrome, so you can like natively DEX trade on Base through the Coinbase app. So like there is a very big overlap of that. And additionally, like they accrue revenues through the sequencer fees of Base. It's not a huge amount, but compared to all the other L2s, it is kind of the leading chain out there. And yeah, like this is part of the whole bet on the Coinbase stock. So I do think like it is going to mute the upside potential for the Coinbase stock, obviously much more than any upside potential for a Base token. Like if they launch a Base token, I think it's very easy to say that it will trade in the multi-billions of at least an FDV from day one.
Okay, so you are coming from the perspective that someone looks at the Coinbase ecosystem and says, I have to make a choice. So whoever wants to invest into the Coinbase ecosystem has to mutually exclusive decide whether they invest into the coin stock or they invest into the Base token, which, by the way, who knows how long it takes until the Base token is out. Maybe that's a problem in 2 years from now. I don't know. That I don't agree with. I think the capital looking to potentially be deployed into the coin token is not overlapping a lot with the capital that is potentially looking to be deployed into the Base token. There's probably some overlap. Maybe it's even 20%, but I think it's more like 5% overlap. I think the capital looking to potentially be deployed into an on-chain token is not the same as the capital looking to get some exposure to this crypto thing and invest into an exchange that gets exchange fees, custody fees, trading revenue, as opposed to an L2 that makes money from sequencer fees and transaction fees and is like way more infrastructure heavy and like it's, yes, they carry the same brand, so to speak, and probably some of the same strategizers behind the scenes work on this. But I still see the investments as completely distinct opportunities. It's surprising to me that you would think the upside potential is endangered because of an additional token. I think, honestly, like, let me put it this way. If tomorrow a super hyped L2 would be launched, backed by Paradigm and SBF and everyone, and Do Kwon, and they would be an EVM environment, super hyped. I think that would cap the base upside way more than the fact that the coin stock exists, because it's on-chain capital they're competing for. Don't you think that is true?
Well, I mean, first of all, I never said that these two assets are mutually exclusive in terms of you have to assume that people will bet on only either one of them. What I am concerned is, and I mean, empirically, I mean, obviously you don't have a huge collection of prior instances, but if you look at every single example in crypto, whenever you had like a dual token model where one was representing governance rights and the other like kind of more of a like commodity usage. I think Helium had like a dual token model. Maker had something that was adjacent to a dual token model. I mean, Bera Chain, you could argue that it is somewhat of a dual token model. None of these things have performed particularly well. Obviously, it is not the exact same thing if you compare a public equity to an L2 token, but the dynamic is still similar enough that you should look at these prior instances as a lesson. And again, like I've never claimed that these two are mutually exclusive. I do not think that they are. Like I agree with you that for like around 50% or more of the investor base of the base token and the Coinbase stock will be different. However, the remaining overlap of, let's say, between 0 to 49% is going to be relevant enough that people just feel very uncertain about especially owning the Coinbase equity. I think it's not going to like turn out bad for the base token because like it is, I think, much easier to view the base chain as like an individual standing ecosystem once they have their token live than the Coinbase application and company without the base chain once the base token is live. So I think the negative effects might be more visible in the Coinbase stock. And again, I'm not implying that Coinbase as a stock will go down. I just think that if there was a way where you could kind of integrate Coinbase stockholder claims natively into the base chain versus launching a native base token, the aggregate value for the company, like the company stock Coinbase, would probably be higher in the first version because there inevitably is going to be some sort of conflict of interest between these two assets. And like again, not a black and white view, not mutually exclusive, but I think it's very challenging to navigate that. And I think that Kraken, if they plan to IPO before they launch the Inc. L2 token, is going to face somewhat of a similar challenge. It is much more difficult to launch a token, especially as a centralized exchange, if you have publicly traded equity. I mean, it's much easier for Binance to run up the BNB chart or for Bybit to run up the MNT chart because these are not publicly traded stocks. So they do not have any like apparent public conflicts of interest between like pumping their like associated chains token. But yeah, like I think it's kind of too early to forecast any results. Like I think we have to wait until they leak more details how they want to structure the utility and the tokenomics. Like all I want to say is that it's a much more complex case to navigate than other ones.
Maybe to summarize, definitely a few good points. I would say I agree with some of them for sure. But I think Base is more a bet on infrastructure and like blockchain infrastructure and an on-chain future. And I think Coinbase is like a traditional bread and butter clearinghouse exchange marketplace business model, right? So I still think it's two different distinct bets. But to Juri's point, maybe to switch topics a little bit, the best time to benefit of a potential token launch is in the speculation phase of it. So I think the token launch will be dragged. I mean, I wouldn't be surprised if it's like 3 years from now. Because one, Coinbase is going the heavily regulated route always. And I think that will hold true for Base as well. They're not going to do like quick and dirty offshore thing. I mean, maybe they do an offshore thing, but it's going to be like well thought out. And the other thing is like, yeah, like you only have one opportunity to get as many on-chain users on your ecosystem as possible in anticipation of a potential token. And I think I just don't see that time frame being few months. I think that time frame will be multiple years.
I think 3 years is a tough timeline. I would, like, gun to my head, I would have guessed it's somewhere between 12 months to 24 months. Any longer than that, I think that would come along with a like decreased sentiment. I mean, Coinbase is the only entity that has a good excuse to delay their token launch just because of the legal complexity and like the economic complexity of it. If you look at Linea, like everybody hates that thing because they farmed their users for 2 years straight with their like stupid Linea XP whatever campaigns, and like nobody likes to use the chain. The L2 meta in that sense is completely over. It's kind of like Starknet or ZK Sync, which have like 12 daily active users or whatever. I mean, Base obviously has an opportunity to do stuff differently, like with a Base app, with some other applications, etc. On that note, I mean, Onur, you've in the past month have been kind of a Base chain hater, especially when we've compared it to Solana, because your argument was always that the Base activity is somewhat inorganic and somewhat forced. Are you planning to farm the chain to any extent leading up to the token? And like Juri, you too?
I'm not a Base hater, I'm a Base skeptic. And I want Base to succeed in the sense of like having an additional ecosystem that suits certain type of people well. And I think it's basically exactly the people that want to align with the Coinbase ecosystem. So whenever a more conservative or traditional player wants to do their or like even an established brand, like a big consumer brand, whenever they want to do something in crypto, I think it's much better to go with Base than go with Polygon or something, which has been the case in the past. So I think I don't hate Base. I just think it's the citadel. It's not the bazaar, right? And I come from the bazaar. I come from the people, the crowd, the more like organic on-chain worlds. And, at some point there will be some organic on-chain activity on Base as well. And I think there is today, to be quite frank. It's just not even close to what's happening on Ethereum or Solana. And that's just the reality. And I say that as someone coming from Cosmos. Like, for the longest time, my number one goal was to make Cosmos succeed. And I ignored everything left and right. I was quite tribal about it until I realized, okay, like let me zoom out from my tainted glasses and let me just look at what is happening actually on chain in the real world. And I was shocked. I was like, okay, like it's orders of magnitude in difference. It's not even one. It's like 2 orders of magnitude, 3 orders of magnitude in difference in terms of like user numbers, volume, TVL, everything, builders. So, and I think if you look into the money Base spends into marketing campaigns, initiatives, on-chain summer, videos, it's great, but it's But if that creates the impression that it is the number one on-chain ecosystem, I just think that's kind of where I'm skeptic. That's wrong. The number one on-chain ecosystem, or like number one and number two, depending on your use case, is Ethereum and Solana, and that's just the reality.
Yeah, I'd agree with that.
Yeah, same question for me. Was one to one the same question to me, right?
Yeah, I mean, like, are you planning to farm it at all?
Because that's precisely the take I also had in mind. Just wanted to add to it that what I see positive about Base is that it might revive a new user base that is not in crypto yet. Just because the step from Coinbase to Base might just be like a lighter one compared to going from Base to Solana or Ethereum main chain. I think no newcomers are using the Ethereum main chain. Yeah, and I'm not a big fan of all of the other Ethereum tools. Maybe Monad can still be interesting, but the rest so far failed to prove itself. And also, it's important as I'm coming from the Ethereum world, I just want to add, I really hope that Ethereum is becoming successful because I really like Ethereum a lot. Have been a pioneer since a long time. And right now, Coinbase is the most important L2.
Are you rebranding right now?
No, I'm not rebranding.
What do you mean you come from, like, you were Cosmos?
But before that, I was Ethereum Ultra.
We all were, but you seem to like just skip that chapter. Is it
no
a shame in your CV?
Not a shame at all.
The early life section in his Wikipedia article Juri wants to hide.
Yeah, correct. No, it's just like no, not at all. It's more like Ethereum basically got me into crypto, like really into crypto, because on Ethereum you were able to use stuff, and back in the days it was like the only thing that you could use. Then Ethereum became too expensive. People skipped around some L2s, and then I entered Cosmos. But originally, the one thing that I was like really focused on was Ethereum for like a pretty long time. So yeah, I want to see Ethereum succeeding, and right now it doesn't look like Cosmos is succeeding. So I hope that at least one of my old loves is achieving something. And so I'm rooting for Ethereum. And right now, we have to be honest here, Coinbase, like Base, as Kyle Zamani once said it in a tweet, the future of Ethereum is Coinbase with the Base tool. So it has a significant impact.
Another discussion I've been seeing, like people were arguing whether it's maybe kind of irrelevant to the Coinbase stock, but the launch of a Base token might be bearish for ETH, which I don't really think. I mean, of course, it's somewhat competing over the same pool of capital that is natively crypto invested, but I do think that the thesis of like L2 activity not all accruing back to the ETH token has been around for like 12 months, 18 months now, and it has seemed pretty consensus. Of course, like it's not necessarily going to be bullish ETH, especially if they structure the Base token in a way that it will like capture revenues or like gain some other utility directly from activity on the Base chain. But yeah, just wanted to throw that out there. Maybe as a last brief pivot, because I mean we talked about Pump before, but we didn't really dive deep into the streamer coins. Like, are any of you guys planning to speculate on any of the streamer coins, or like how would you approach that?
No,
do you think that there's any, like, will they, maybe Onur, because you were pretty deep in the meme coin trenches, do you see like are streamer coins the new meme coins?
I don't think so. And the reason for that is sometimes it's better to have like no utility and nothing regarding expectations for a coin than have something. And like, look, when we look at like some successful meme coins, Moodang or Fartcoin, or I don't know, like name another one, whatever, like Pepe. It's basically some OG meme or some funny thing that happens on chain, and then a lot of capital forms and is being deployed towards that. And even if it goes down 80%, those projects still sit at multiple hundreds of millions in market cap. When you have what you have in the streaming meta is completely different. You have creator fees, which make, again, the trading of this expensive. And you only have one big catalyst, which is streamers started streaming. And if you look at the streamer meta charts, they all look the same. They have an initial hype. They even go to like mid 8 figures or high 8 figures, but then they go down only because no one knows how to price these things. And I think this is kind of the difference here. I think we don't know how to price streaming coins yet. I don't think they compete with, and I think I think the OG meme coins will have probably an order of magnitude higher market caps on average than streamer coins. However, I think streamer coins is more a play for pump on quantity and not quality. So I do see tens of thousands of streamer coins, which will make it hard to prioritize the right one. Some of them will pump. I think some of them will go even above like 9-figure market caps. I just don't know how sustainable that is. And because we don't know how to price these things, it is, I think, a crazy gamble. And I think the only use case for buying a streamer coin is if you are extremely early, meaning in the first few minutes of a streamer coin of like a big, famous or potentially good and funny streamer, and you are able to make kind of an early entry, that's probably like a good bet to take. But for that, you have to be in the trenches. You have to monitor. You have to have 5 screens, cortisol maxing 24/7. I'm not doing that. And in general, though, I'm yet to see what is the actual floor of the streaming coins. Can they sustain there? Is the revenue that they're creating in terms of the creator fees sufficient at the floor that they're building? It's easy to create 20K creator rewards when you are trading at 20 million market cap. But when your token drops to 500K, which I think many of them will, I'm curious to see, if they then start making $700 a week from streaming, if they will still have kind of the motivation of doing this. That's the other thing. Right now, the incentive, because of the dynamic that I just described, the meritocratic right thing to do when it comes to optimizing on revenue is to launch a new streamer coin every day. Because you would make, of course, like this will have diminishing returns. Think of the like roller coaster loops that get smaller and smaller. Because of the initial price action on volume being in the first few minutes, the creator if you look at the creator fees over 6 months, maybe we end up with something like 50% of the creator fees you earned over 6 months were made on day one. So, and that's why I'm very uncertain about how to price these things.
Yeah, I agree. It's basically the TLDR. I would say it's much easier to run it up to temporary relevance because contrary to like these typical meme coins, you're not dependent on like an entire community to form around it and to like rate tweets and to like create new memes about like one singular theme all the time. It's like if a streamer is funny, if he's entertaining, and if he's doing like stuff that grabs attention, like it's very easy to generate relevance. But at the same time, like it is very dependent on that streamer. Like once the streamer stops streaming, or like he gets boring or arrested or whatever or killed, I don't know what these people plan to do in the near future with their pump streams to like make it more egregious to attract attention. Like the coin is basically dead. Like there's zero floor to it. Like it's gonna go to zero unless you really have like some celebrity presence. I don't know, if The Rock or somebody of that scale would start streaming, I don't think it would go to zero, even though like he would abandon pump.fun or whatever. But yeah, I pretty much agree on that. Like the big incentive right now is to just like push tokens from the streamer's side because it's very easy to generate revenue off of that. Maybe we should explore the possibility of launching this show on pump. Just like the base token is exploring opportunities, but I don't know. Let's see how long this meta lasts.
Let's CTO a coin and then let's start streaming on Pump LFG. All right.
We're at the hour. Do you guys have any other topics?
I just wanted to briefly touch on base on, as we talked about Ethereum, like some audit that took place with Killen, which once again proved, how fragment even like the institutional integrations are these days. Let me just briefly share my screen. How can I do that? Where's the thing? Somehow I can't. Here, now. One sec. What the fuck? Here.
No curse words on stream, please.
Okay, here. Perfect. Yeah, can you see it?
Yep.
Okay, so yeah, what happened was, so Killen, which is like one of the leading validators in the industry, they built an integration, an API for Swissborg, which is an exchange where you can buy and sell crypto, obviously. But besides that, they also have like an earn program, which is like a staking service. And one big issue was that the API to Solana got compromised, leading to a loss of 192,600 SOL, which is worth roughly $40 million at the time of the incident. So obviously this made huge news, and I just wanted to close that up with like a thought piece, because the interesting thing is, and then this is like, maybe you guys also have an opinion on that, but I mean, obviously nothing on chain happened. So how this API worked is you have like the API that was like built and provided by Killen, and one was able to interact with it, which was responsible for staking and withdrawing or giving like certain commands to the system. So for example, you are the user on Swissborg, and then you basically give a command to start staking or to withdraw your staking amount from Solana. And what happened here, and this is what I found like a little bit fascinating, is that there was not an alert system at all. So apparently there was like this message sent by the hacker. He compromised in that way that the API communicated, hey, I want to withdraw $40 million, and the system, like the system didn't alert it or whatever. I know maybe the hacker was like amazing and basically overshadowing it, because there's still a 2 to 3 days unbundling period on with Solana staking. But I just find it like still very interesting how this could have happened, that nobody was like at least looking at the 40 million staking withdrawal or like questioning it. So just one thought piece. Interestingly, now Killen started to withdraw all of their stake that they have on their Ethereum validator. So interesting to see what's coming next for Killen and especially Swissborg.
Yeah, I think these events will continue to happen in the near future. Like we discussed that in a pretty lengthy way last week when we talked about the NPM hack, like the tail risks of crypto security. They still exist. Like if you look at traditional finance institutions as well, like there's just a lot of like kind of stupid mistakes that nobody really expects. These are usually like the most profitable exploit verticals. And I mean, the somewhat sad thing about like an irreversible infrastructure is obviously that it is very hard to recoup these things. So like, yeah, I mean, so far, I guess we've been lucky enough that it has only been hitting like institutions that have been profitable enough and large enough to cover the hole in the past. For example, the Bybit hack, I guess, is the best example for that, which happened earlier this year. It was more than $1 billion, and they were able to like plug the hole because it's a very profitable exchange. But once we kind of move down into more everyday integrations, which operate at lower margins, but with a lot of volume, I do think that there will be instances where that like maybe creates some very bad downstream effects. But yeah, I'm not very opinionated about it.
Friends, I have to run. Thank you very much for this. If you want, you can continue for a little bit more. But yeah, speak soon. Bye.
Speak to you soon. Bye bye.
See you around.